This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia and Nigel. Morning, guys.
Hi, good morning, Prashant. Good morning, Nigel.
Good morning.
Well, there are a bit of concerns globally, right?
Yeah.
I mean, markets are a little jittery. Crude is under a bit of pressure. Go Air has filed for bankruptcy. So there's so much action this morning. But let's see. I think the SGX Nifty is also a bit on the back foot.
It is. And I think US markets have taken a bit of a step back last night. And I think that's where we begin the day with. You had a knock. No other way to put it. The S&P was down 1.25%. The NASDAQ was down 1% or so. And if you want to ask which is the number one reason for this, it is basically the fact that the regional bank pack in the U.S. sold off quite aggressively. I mean, a measure of the U.S. regional banks sold off 5%. The index sold off 5%. That tells you the level of fear. Now, if you're looking for a smoking gun in terms of what happened, is there a new bank in the U.S. which is going under or something of that sort? There's nothing, right? There's no one single trigger or catalyst per se. And it seems to be that it is momentum kind of taking over in that part of the market in the US. Fear begets fear and momentum begets momentum. And that's essentially, I think, what is happening there. There's no real smoking gun. There's no one single catalyst or even a couple after what has happened, of course, with First Republic. Now, volatility in the regional banks raises chances that the Fed, when it announces its decision later today, it'll be more cautious. It won't be... I mean, it lowers the level of or the risk of the Fed being too hawkish, right? Because financial sector turmoil is one of the big priorities that the Fed wants to focus on. I mean, it wants to avoid financial sector turmoil. And if the regional banks go into a bit of a tizzy once again for whatever reason, I mean, the Fed will take note. Risk management comes into one of the top things which will be discussed when the Fed announces decisions. In any case, the consensus is calling for a 25 basis point Fed rate hike. That's later today, and we'll react to it tomorrow morning. But the forward guidance could get impacted based on what is happening here. So, you know, it's bad news what's happening with the with banks, but you're focusing on the Fed. Perhaps it'll have some moderating influence. Now, technically speaking, there are two important things which have happened last night, and both are significant. The S&P 500 has completed a triple momentum divergence at its highs, which is negative, which is a negative technical indicator. And on the other hand, the CBOE Wix, right, the volatility gauge in the US, that has completed a triple momentum divergence at its lows. Now, so the S&P is looking like it's, I mean, at least going by this indicator, and it happens rarely, so it's more weight is put on this. It's for the S&P, this has come through at the highs, and for the Wix, it's come through at the lows. So will the equity index start to correct a little bit, and the Wix, the fear gauge as it is called, start to rise a little bit? I think that remains the big question. More on this a little later. Oil prices are down 5% or so. And for a big importer like India, it is positive. What it does on the risk sentiment side is another thing, but it sold off a full 5%. No oil-related concerns, but broader macro worries. Now, coming to the market here, the Nifty basically closed off the high point. You know, we started about 90, 100, 110 points higher, held that gain throughout the course of the day. In the last 30, 40 minutes, the market pulled back about 40 points. But in any case, we've closed above the 61.8% retracement of the entire fall. The upper end of the rising channel for the Nifty stands at 18,450. By the way, 18,450 is also where the 78.6% retracement of the entire fall coincides at. So that's the important number to watch on the way up here. On the lower end, I think, which will also perhaps come into focus, that stands at 17,900. That's not 7,900. That is 17,900, which is the level which should not be violated. So that's on the Nifty. For the Bank Nifty, we are just under 2% away from its all-time high. That stands at 44,152. So, I mean, you could put even shorter-term targets, but just 1.7% away. So I think that's the number to watch on the upside. And lower end of the rising channel for the Bank Nifty, the same sort of corresponding level as I put out for the Nifty, stands at 43,200. And that should act as a support and should not be violated if the market is to say, a little supported and has to map out higher levels. I mean, it's a tricky day. There is a fair bit in terms of handoff from Wall Street. SGX is indicating a 80-point lower start. And then later today, we've got the Fed decision, which will be consequential because, I mean, it's a big cue in terms of what the Fed wants to do. The last hike was an uncomfortable kind of, hands tied behind their back, 25 basis point hike. Will we get a similar picture? Will the Fed indicate that, well, it's one and done, 25 and then a long pause? These are imponderables at this point in time. So I think it's a bit of a holding pattern kind of market that we are in for today. And we pick up on all the new information starting tomorrow morning. Sonia.
Oh, absolutely. And along with all of that, there are also ongoing concerns about the banking contagion, right, in the US. And that, I guess, puts some amount of pressure on the US markets as well. So if you look at it, it was not a small fall. The Dow was down over 360 points, S&P 500. In fact, this morning as well, the Hong Kong market is under a lot of pressure, 1.5% lower. We are starting on the back foot. The SGX Nifty is also indicating weakness. The FOMC decision today, Prashant has spoken about that. So there's a 25 basis points rate hike expected. There's also a sharp fall in crude prices globally, and that's an indication perhaps that there are some demand concerns emerging yet again. Crude is now at a 5-week low at about $75 a barrel, so keep an eye out on that. For our own markets, Nifty closed just below that 18,150 mark. So we've covered quite a bit of ground if you look at it in the last 10-15 days. There was, however, a sell figure from the domestic institutions. So FI buying continues. FI has bought almost 2,000 crores in the cash markets, but DII sold about 400 crores or so. As far as domestic cues are concerned, I'm looking at, very good numbers from Tata Steel. Margins came in much higher than what the street was estimating. The EBITDA per ton was quite strong for the domestic business. The net debt has gone down as well, and that's something that the street always likes. So perhaps this entire metal pack could be in focus because of those numbers. And lots of big numbers to track today as well. There's Titan, ABB, MRF, Havels. There's a lot of these aviation companies that will be in focus because Go First has filed for bankruptcy, which means about 9-10% of the domestic supply, now is removed, and it could be beneficial for the likes of Interglobe, etc. We'll talk more about that later. But for now, it looks like the market is going to sort of give up a little bit of ground. But this has been a buy on dips market. So if, traders choose to buy the dips, then that would be interesting.
Well, that's right. Now, today it's going to be a test for that buy on dips that we have been seeing. And it's played out so well over the last many sessions. Now, just one point I wanted to make first before we go on. Yesterday, you had the Nifty that ended higher and the India VIX as well that moved up. Normally, that's a bit of an ominous sign. They move in, in an inverse direction. So they move in different directions normally. But this is a bit of an ominous sign. So just keep an eye out on that. Maybe you'll say that the VIX was too low, so it had to bounce a little bit. But that's one point we take on board. The second factor is yesterday, you had, it was Tuesday, so you had the weekly expiry that played out for the Nifty Financial Services. And that's why you saw that dip in the final 30-40 minutes or so. Now, the global Q is a little bit jittery, and we have a big Q that's coming up later tonight. But the crude oil price fall, and in the last few days, it's fallen from around mid-80s to mid-70s, which is a positive. The bears, though, they are positioned and they believe that the 18,250 odd level will hold out. You'll ask, what are the FIs do, right? They've been buying in cash. Well, yesterday, they went full throttle. They added more than 20,000 long contracts, and it's been a while since we had an opportunity to say that, actually. And now they're net long on the index. 51% of their positions are on the long side. And this is the first time they're net long all the way since January 24th, 2023. So it's been a while since we have seen FIs get net long on the index. But before we celebrate that, you need to take note of the fact that they also wrote calls yesterday aggressively. And that's after a while as well. They wrote close to around 50,000 call contracts. And that's giving me a sense that at higher levels, it's likely to see some bit of selling or it's likely to be capped. Two strikes I want to pull up for you. 18,200 call. Big open interest surge yesterday. And now that total open interest is at around 1 crore shares. So from all the active contracts, that has the highest open interest. The Nifty Bank as well, yes, you saw 43,500 call. That added a fair bit of open interest. The premium out there came down from around 250 odd. So that 43,750 could be a bit of a hurdle for the Nifty Bank. On the Nifty itself, 18,250, as I said earlier, the bears are positioned to defend that level. First stop loss on the downside will be 18,000 to 18,050 odd. But if you break that level, then you're counting on the 100 DMA holding out, which will be the line in the sand. SGX Nifty is indicating a bit of a pullback. The buy on dips thesis gets tested, but my gut is we see some consolidation. We could see some bit of a downtake before we get past that 18,250 odd mark.
And as Rakesh used to, the late Rakesh used to say, Shivaji nahi banne ka. Right? I was just saying, the market is a beautiful thing, right? It throws you ball after ball after ball, and you're no under obligation to play everything.
Yeah.
So you wait there.
You can sit it out.
Yeah, you just sit it out, and you wait for the perfect pitch, and then you hit it. A clean strike.
And a couple of Sonia's fans are asking, why is Sonia happy when the SGX Nifty is down 80 points? I'll tell you why. Last night, Arsenal beat Chelsea 3-1.
Absolutely.
And still in the race for the EPL title. So let's hope, I'm a diehard.
And beat by a huge margin, right?
Yeah, it feels good after the kind of drubbing that Arsenal got last week from Man City.
Yeah.
So they're still in the race. So that's the reason why Sonia Shenoy is a little happy
It's on the SGX, guys.
It's on the markets. There's life beyond markets.
Absolutely. Well, let's quickly tell you what's lined up here in the next 30 minutes or so before we go any further. So we have, of course, the global setup in focus, and we have our guest from Standard Chartered Bank this morning who will join in on the setup there. Our research team will bring you CNBC-TV18's list of top 10 stocks of the day. At 8:30, we do a fundamental stock check with Devin Choksi at KR Choksi Securities.
All right, let's also begin with some cues on the market itself, because it's a big day, right? You have the FOMC policy outcome as well. On the equities front, Victor Schwetz of Macquarie says that after 2 months of selling in April, foreign investors tentatively returned to the emerging market ex-China universe with modest net buying of $650 million. Victor says this was also the second month in a row that India benefited from positive net inflows. He says India remains the best secular long-term EM choice, and although he believes that the current outperformance is premature, they are happy to remain invested.
Well, let's get you some money market views. Kunal Sudani of Shriram Bank says the dollar lost momentum after U.S. job openings, labor turnover survey and factory orders data, with the dollar index and the U.S. 10-year Treasury yields falling. He says the Fed policy is due today with 25 basis point hike discounted, and all eyes will be on the press conference by Chair Powell. He says dollar index finds resistance at 102.6 with a good base formation at 100.85. For the dollar INR, Kunal says 81.6 to a dollar acts as a support, while 82.02 to a dollar is a resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a narrow range of 7.09 to 7.13%. With the lack of any fresh triggers, he says the SDL auction supply was in line with the calendar and decent demand was seen in the auction. He says oil continued to trade lower and US Treasury yields, though were volatile, traded in a range of 3.4 to 3.55%. With the FOMC due this week, going forward, he adds market will take cues from the FOMC decision due tonight. Non-farm payroll data later in the week and the weekly auction demand at these levels. He expects the 10-year benchmark bond yield to trade in a range of 7.05 to 7.15%.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Tata Steel, Ambuja Cements, Spandana Spurti, Fino Payments Bank, Humans, Indiglobe Aviation. They are stocks that will be reacting to positive news flow, while on the flip side, Central Bank of India, Bank of Baroda, M&M Financial Services and Coforge will be reacting to negative news flow.
Well, so that's basically what we are watching out for and what's coming up on the show. Fook Heen Yap is Senior Investment Strategist at Standard Chartered Bank. He's joining us right now. Mr. Yap, great to have you with us here. Thank you very much for your time. I hope I got the name right. Please feel free to correct me if I did not. Just a quick word, Mr. Yap, on how things are set up. We have sort of regional banks in the U.S. which are sold off. There is, as I was saying, no real smoking gun, at least not that I can see. No one real big catalyst which led to the sell-off last night. And then we've got the Fed meeting sort of later today. Do you think what's happening with regional banks will lead the Fed to be a little less hawkish if they were planning to be hawkish? Does it moderate the outcome later tonight?
Yeah, I think pretty much in line with consensus, we do expect the Fed to be raising rates by another 25 basis points when they meet later on. And after that, we expect the Fed to pause for a little while. And then we do see another 50 basis points cut towards the end of the year. And that is our base case, which is not too different from where the futures and money markets are pricing in at the moment. And, our view is we are underweight on equities globally because we do see an 80% chance of a recession in the US. And, the saying has been that the Fed will hike until something breaks. And we saw something break with a few banks being taken under control by the FDIC. And over the weekend, as you mentioned, with the First Republic being taken over by JP Morgan. So we have a sector view as well for the US. And back in March, we actually downgraded US financials to be underweight because we think the large banks will do well and they're actually gaining market share. But it's just the worry about the regional banks and the smaller banks, which are regulated a bit less tightly, and whether there's worries about a bit of a domino effect and how that might affect the rest of the sector's sentiment.
Okay, that's interesting. So you're saying there will be a rate hike in this policy, then there'll be a pause, and towards the end of the year, we're looking at a rate cut. So perhaps this is the end of the rate tightening cycle, at least in the US. Do you think that could be the case in emerging markets like India as well? And if yes, what should the most prudent strategy be as an equity investor now?
Yeah, I think within India, we've seen signs and signals from the RBI already that they have a pause, I think, in terms of the last action that was seen in April. For India equities, well, our view globally for equities is that we are underweight because the US, we think, will enter recession, and Europe as well. And then within that, though, what we really like is Asia ex-Japan, and in particular, China. And the reason is because we think it's just at a different point of the cycle. For India itself, we have a neutral view on India relative to Asia ex-Japan, but relative to global, we think India can outperform. And why is it neutral within Asia ex-Japan? Why we prefer China relative to India? It's just a function of valuation. I think the India equities is about a 50% premium right now to Asia ex-Japan, when historically it's about a 38% premium to Asia ex-Japan. So it's come off its highs, but it's still a bit elevated. That's why we're neutral on India. But in terms of the earnings that is being delivered, I would think India continues to deliver very, very strong earnings. And the way we would play the market in India is we prefer the large caps. Sector-wise, we prefer financials, industrials, and staples in India. These are sectors where we think it's more attractive from the valuation and from the earnings delivery point of view.
All right, Fook, you also mentioned that you like some banking names, but any view on the IT stocks here in India? Because they have been relative underperformers, or would you like to avoid IT?
Yeah, we're a bit more neutral there. I think it's not really, I wouldn't go into any stock specific, but in terms of our preference, we think, the financials, in terms of the credit growth, we see that continuing to grow. And then that's why we like it. Within staples, it's a bit more defensive. And then industrials with the infrastructure and the government policy, incentives for manufacturing. But for the tech, I think we're neutral at the moment.
Right, Fook. I'm not sure whether you'll have a view on crude, but crude oil prices have corrected quite a bit. And from an India perspective, well, we are celebrating that. But since y'all are factoring in a recession, do you think crude oil prices dip further from here as a house? I mean, do you have a view?
Yeah, we do have a view. I think over a 3 month, we see the WTI staying around $75. But on a 12-month view, we do see it weakening a bit more. And we look at the demand forecast out there, and the demand forecast compared to 6 months ago very clearly has been coming off. Whether you look at the IEA or the EIA, all of the estimates are coming off, and from OPEC Plus as well, it's been coming off. Now, what happened a few weeks ago, of course, was a surprise cut in supply by the OPEC Plus, and that actually helped the oil prices a little bit. And so on the 3 months, we think it can be supported, but on a 12-month view, we do see the WTI weakening a little bit from here towards the $70 mark, just because of the demand and the recession that we expect, especially in the US.
All right, Mr. Yap, thank you very much. Good speaking with you. Appreciate you joining in with that perspective. Appreciate it. Okay, we'll take a very quick break here. Our list of top stocks to watch is lined up next. Take a quick commercial break. We're back with that in just a bit.
Okay, well, I don't want to speak too soon, but there's an old adage, sell in May and go away. I don't know if that's going to play out. The May has definitely begun on a bit of a back foot. I mean, at least this morning looks like it's going to be a weak one. But then we'll take it as it comes. SGX Nifty is now down almost 85 odd points. But our entire team is joining in to tell us about all the stocks that you need to watch out for as we kickstart trade this morning. So let's get straight to it. Nigel, Tata Steel, that was a good one.
Well, Tata Steel yesterday ended at the high point of the day, but the numbers look very, very good. So expecting the stock to outperform today, at least in the initial part of the trading session. The revenues, the profitability, the margins, as well as the profit number, all of them much better than what the street was working with. So on the basic numbers, it's a beat. But you look at the geographic breakup, right? And India, much better. We're working with around 13,500 odd. It came in at around 16,700 rupees. So input costs clearly cooled off. Some operating leverage played out, and they have managed to control their costs. So that's why that is a big beat out there. Europe, well, the loss was, was less than expected. It's a negative $94 per ton. That compares with the negative $107 per ton that we were factoring in. So lower losses at Europe. And the Thailand business, well, it's a smaller part of their business, but some improvement is what we are seeing over the last few quarters, so close to around 2,000 rupees per ton. The cherry on the cake is that they reduced their net debt number by close to around 3,900 crores, which is a positive. And they've also given in some dividends. So the stock opens up in the green, but just to caution our viewers that steel prices in the last 25 to 30 days have declined in China. So you're expecting some bit of pressure on prices here in May as well. So just keep that in mind. But for starters, it opens up in the green. But to understand more about the company, we'll be speaking to Tata Steel's MD and CEO, Mr. Narendran, at around 1:35 p.m. to discuss the earnings and the outlook. It's going to be a cracking conversation, so make sure you tune into this one.
So Tata Steel disco will do disco, Nigel?
It did the disco yesterday. Today, it's the music will be playing. It'll dance initially, but
I thought you'll start with that disco.
I used it yesterday, so I said I'll take it a little easy.
Right, well,
You do the disco along with disco. That's the question.
That's at 1:30.
That's at 1:30, and it's going to be important because it's before the analyst call. So we'll be bringing in the first take from the management. So.
Yeah.
It's going to be important.
All right. That's Tata Steel for you. Now, Abhishek is standing by with the Central Bank and Bank of Baroda numbers. Abhishek, morning.
Morning. So Go Ahead has filed for insolvency. The stock in focus would be Bombay Bumrah, Central Bank of India and Bank of Baroda, who have exposure over there. So Bombay Burma has an exposure of about 318 crore of debt, and they also have a 36.5% stake. So lenders to Go First are Central Bank of India, who have an exposure of about 1,560 crores. Axis Bank has a small exposure of about rupees 30 crores. IDBI Bank has an exposure of nearly about 59 crores, and Deutsche Bank has an exposure of 1,320 crores. So Bank of Baroda also has an exposure of more than 1,400 crores. The source being equity, ratings. So these stocks will be under pressure. Back to you.
Okay, thanks a lot for that. So there is also, the entire aviation space that will be in focus as Go First has now filed for bankruptcy. That could benefit Indigo in many ways. So we're talking about the stock perhaps being in the green this morning. Go First insolvency could remove 9% of the domestic supply in the aviation sector, and many brokerages have written on this. So Credit Suisse put out a note where they say that Go First insolvency can help Indigo improve their market share, can help them with stronger yields in a capacity-constrained environment. There can be increasing leverage with the global OEMs, and a lot of the lessors may now be keen to allocate some of the Go First aircrafts to Indigo because they have the similar fleet type. Now, remember, this is a sector which is booming at the moment. A lot of global investors are investing in this space. So the fact that one big player is now out of action gives the others, a big chance to gain a lot of either fleet or the investments. Also, Credit Suisse has an outperform with a target price of 24.50. BofA Securities has a buy with a target price of 2,700. There's also the incremental positive because of a fall in crude. Crude prices are down about 5%, so that will benefit them operationally.
Well, that's right. Sonia, in the final hour of trade yesterday, as this news broke, we had alerted our viewers that it could potentially be a beneficiary. And if we pull up the intraday chart, well, the stock ended virtually at the high point of the day as well. Interglobe Aviation is the stock we're talking about. I think we can, focus on the lenders as well, to this group. Abhishek, I think, is joining in to run us through, a list of further analysis. No, I think let's focus on Ambuja Cements first up. The results out there were much better than what the street was expecting, particularly on the EBITDA front. EBITDA came in at around 790 crores odd. That compares with around 750 crores that we were working with. Margins as well, much better. Why were they better? One is operating leverage played out. The volumes came in much better at around 8.1 million tons, which was much better than anyone on the street was working with. And also the margin improvement is operating leverage and lower cost. Two costs, one is other expenses as well as power and fuel costs. Both of them were down in the mid-teens. The guidance that the management has given is very, very ambitious, but let's see whether or not they can get that. They're looking at doubling their capacity in the next few years, and the EBITDA they're saying for this year itself will improve by around 300 to around 400 rupees per ton. So the stock opens up in the green, but let's see where it goes from there.
Okay, that's on Ambuja Cements, but let's get Abhishek back on board. He's tracking M&M Financial, Spandana Spurti and Fino Payments Banks. A lot of data has come through. Abhishek, over to you.
M&M Finance has given the monthly update in terms of the business momentum that they had in April. Disbursements are up 39% YOY, but a decline of 32.6% month on month. So, the year-end figure has actually been played out over here. Collection efficiency has also dipped, to about 92%, which is the lowest that you are seeing in last 6 months. It is versus 105% that they had in the month of March. Asset book or the overall business momentum remains steady, growing at 1.9% on a month-on-month basis. Asset quality, they say, that has remained range-bound to Q4 numbers. Now, typically, at times, they do give gross NPA and net NPA number, and this time around, they have not given. Fino Payment Bank, the Q4 momentum in PNL was pretty strong. Total income being up 13.5% YOY and about 3% sequentially. The EBITDA, that saw us, sharp jump by almost 46% YOY and about 10.5% sequentially. So you saw EBITDA margin expanding both YOY and quarter-on-quarter to about 13.3%. PAT also grew robustly by 25% YOY and about 16.2% sequentially. So you are seeing net profit margin also expand on a YOY and quarter-on-quarter basis. Spandana Spurti, the disbursal momentum was pretty strong, growing at 120% YOY and about close to 30% sequentially. So you had AUM growth as well at 29.4% YOY and 24.2% sequentially. Disbursal to AUM ratio is now moving towards like an HFC with a longer duration portfolio. So it's now at 54.3% versus 45% that you had in previous quarter and around 19-20% that you had in Q2, which is typical for MFI portfolio. Gross NPA has improved given the fact that they have sold NPAs to ARC. Gross NPA ratio is down to 2.07% when compared to 5.3% in the previous quarter. Net interest income, robust growth over there, 104% YOY and 48% sequentially. That led to strong profitability, which grew by more than 68% on a quarter-on-quarter basis. Back to you.
All right, thanks a lot for that. Vivek is also standing by to give us a couple of more stocks that are in the news. Vivek, over to you.
Well, good morning. A couple of stocks on the radar. First on our list is Coforge. The consistent supply overhang continues to persist as far as Coforge is concerned. Yesterday, too, in a large block deal, Bearings P actually exited 3.5% out of the total 30.16% stake that they held in the company. So Bearing Private Equity actually had almost 70% stake in the company at the end of September 2020, which has now fallen quite significantly to 26.5%. Now, one of the large buyers in yesterday's block deal was Motilal Oswal, the multi-cap fund. They picked up almost 0.8% stake. The other stock on our radar is Cummins India. Now, the company, the Indian entity, will be declaring its results on May 24th. Yesterday, Cummins Inc., the global entity, actually reported the Q1 CY23 results. A strong read-through as far as the Indian arm is concerned. The India sales, including the JVs that they have in India, increased almost 21% on a year-on-year basis. And along with that, the key read-through is the fact that they reported a 30% growth as far as the domestic power generation business is concerned. So also remember, while Cummins Inc. has increased the guidance for the global entity, the India guidance remained unchanged, but Cummins India definitely will remain in focus today.
All right, thanks a lot to our entire team for helping us prep for the day. Here's a quick recap of all the stocks with positive news flow. There's Tata Steel, Ambuja Cements, Spandana Spurti, Fino Payments Bank, Cummins and Interglobe Aviation. While stocks with negative news flow, there's Central Bank of India, Bank of Baroda, M&M Financial and Coforge. But the other big global headline is the fall in crude prices. Manisha Gupta joins in for a roundup of all the action from the commodity markets overnight. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, a 5-week lows on the crude oil prices with 5% of decline in the overnight market, and the last month has seen nearly 12% of a fall now come in for the crude oil prices. Not just crude, gasoline, heating oil also fell by more than 5% in the overnight market. Well, we have seen weak economic data come in from US and China, and the US politicians discussing ways to avoid debt default is something that has broken the sentiment yet again. In the and the other news, you also are looking at Iran crude output surpassing 3 million barrels per day, much higher than the allocated quota, and that means more supplies coming into the market and demand not matching up. All eyes clearly on the US Fed rate decision that comes in tonight and the ECB meeting that's tomorrow. So ahead of that, there is choppiness coming in for the other metals also, which have started the day on a decline. The only thing that I see trading in green clearly is the gold prices, trading much higher, above $2,000 per ounce. We've seen nearly $40 per ounce of a jump up come in last 24 hours. So this is the only place that you have buying coming in.
All right, Manisha, thank you very much for that. That's commodities and gold in focus. Well, we'll take a quick commercial break here. Devin Chokshi of KR Chokshi Securities will join in to talk to us about individual stocks. Lots of earnings we'll need to get by. And we'll have the management of Home First Finance. The company continues to grow at a rapid pace. Manoj Vishwanathan, Managing Director and CEO of the company, joins in for a quick conversation there as well. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. The SGX Nifty suggesting a bit of a pullback to kickstart trade, but we have got a lot of stocks to discuss that'll be reacting to numbers and other news flow. And help us out with that analysis, we have Devin Chokshi, who's joining in. Hi, Devin. Good morning. Thanks so much for joining in. Well, the big news is that it's going to be a bit of a crunch with regard to flights, and Interglobe Aviation could be a beneficiary out there. What's your view on the stock, Devin, at around 2,150?
Yeah, good morning, Nigel. Well, certainly, I think both these airlines, Go First as well as the SpiceJet, both of them are having significant amount of aircraft grounded because of their individual problems. I think the benefit goes to the one company which has basically maximum amount of seats available, and that is where the Go Global would possibly be the beneficiary out of the lot. So certainly, I think the view remains positive at this point of time. Fortunately, the ATF prices are more stable than before. And as a result of which, I think the margin pressure, probably which was seen in earlier quarters, I think that is also unlikely to be seen going forward. And that will possibly give the better performance for the company. Not too sure about the valuation at this point of time about the company, but would like to believe that the momentum would favor the Indigo at this point of time.
Okay, the momentum will favor Indigo at this point of time. Got that. Well, Devin, the other stock that I wanted to talk to you about was Tata Steel. Good numbers coming through, especially for the India business. And, earnings better than what the street was estimating. Debt has gone down as well. At this price, how does the risk reward look for Tata Steel investor?
Yeah, Sonia, I think the important point out here would be the Indian demand continues to remain strong and robust. And this is where I think we have been maintaining our firm view on this particular company. We believe that I think India demand probably will save this company from whatever the global uncertainties that we are experiencing currently. Should there be stabilization in the prices across, then probably I think there would be sustained benefits coming to Indian metal manufacturers, including Tata Steel. At this point of time, I believe that given the kind of softness in the crude oil prices and the relative amount of stability as being predicted in that particular area, I would like to believe that energy costs would remain under control, and the so-called margin pressure which bothered the company in previous quarters, I think that is probably the thing of past. given that kind of a possibility, I would think that the stock should perform reasonably well in the current quarter, with the demand scenario remaining absolutely comfortable. One could possibly add into the portfolio if one is, I think, looking at the trading quantity to add for the purpose of next 3 to 4 quarters.
Okay, all right. Thanks for that, Devin. Just request you to hold on, and we have that alert coming up for you on the screen that around 1:35 p.m. we'll be chatting with Mr. Narendran, the MD and CEO of Tata Steel. Well, let's get to the first corporate, though, on the show before we get back to our chat with Devin. Home First Finance is the first corporate on our radar. The healthy business momentum continued for the company in Q4 due to customer acquisition, dispersals, as well as assets under management. They all surged, though the cost of funds remains a little bit elevated, which is impacting the margins. We have with us Mr. Manoj Vishwanathan, the MD and CEO of the company, who joins us on the show. Hi, Mr. Vishwanathan. Good morning, and thanks so much for joining in. Well,
Hi, good morning.
Growth for the past year was very, very good. I recall you telling us that you can do around 30% odd. You've done a little bit more than that. For this year, that's for FY24, what kind of an AUM growth are you looking at? And also on the margin front, NIMs have come down towards that 6% odd mark, 6.1%. Further pressure on NIMs from here, or do you think you can hold on to that? Give us a broad range we should work with on NIMs.
Sure. So let's start with NIMs. I think a very small NIM compression was expected this year because this was really a one-off year when we had multiple increases in rates. Thankfully, we run a floating rate book. So we were able to pass on that increase to customers. However, it looks like we are at the end of the increase cycle, and hopefully it should be better going forward. But we have managed to very well maintain the NIMs. So if you look at the whole year, we have been able to manage NIMs. Actually, the NIMs have gone up compared to last year. So it's at 6.4% for the entire year. So that's on NIMs. Coming to growth, yes, we have been working towards a 30% kind of a growth rate year on year. If you see, our disbursements have reached 3,000 crores, which is almost a 48% increase over the previous year. And this disbursal momentum should help us, reach a 30% growth even this year.
The base is small, right? I mean, so the growth numbers can be, relatively speaking, to other players in the mortgage finance business. Manoj, hi, good morning. So that's the excitement with investors when one speaks to in your company that you can do this 30-35% growth for a number of years to come. Is that how you're looking at things as well?
Yeah, that is how we're looking at it. So 30%, it could be 30%, it could be 35%. I think what is more important for us is to build a solid foundation so that we can keep growing at a decent pace for a long time to come. So that's really what we're working on. The 30-35% will follow through as a result of that.
Okay, 30-35% is something that you're looking at in terms of AUM growth going forward. That's a sustainable AUM growth even in FY24. Is that correct?
That's right, because you can see our disbursal momentum is at 3,000 crores.
Yes.
So, with that kind of momentum, we should be able to reach those figures.
Okay, got it. So I'm trying to understand, if there's a big surge in customer acquisitions, any kind of expansion plans that you're looking at, and if yes, any geographies and areas that you're looking to expand into, what could the, the plan look like about 2 years out?
The expansion is centered or focused on the large affordable housing markets. Affordable housing as a product actually is comes up in more industrialized centers. People who are migrating from smaller towns or smaller villages into larger towns for looking for work. I mean, they are the ones who are, creating the demand for affordable housing. So our focus is also on, tapping these centers. Metros, the periphery of the metros, periphery of smaller, smaller towns, etc. And so our expansion is focused on the states where we are currently present, which is we are present in 13 states in the country at the moment. And these 13 states account for a predominant part of the affordable housing demand and as well as the GDP. So these 13 states account for about 70% of the country's GDP. And so these are the states we are focused on. It's largely in the west and in the south. More industrialized states, more urbanized states like Gujarat, Maharashtra, Tamil Nadu, etc. And so we intend to go deeper in these states and cover the entire state. I mean, that is our first aim. Post that, we are looking at, some of the states in the north, which is MP, Rajasthan, etc.
Sure. So if you go deeper into these states, I'm assuming, not just tier 2, tier 3 cities, but a lot more rural. Do you think there's a possibility of your asset quality getting hit in the near term as the expansion plays out? And can you give us an outlook on what the credit costs could be in FY24?
Sure. So when we say go deeper, we are not really talking about rural markets. That's a totally different segment. We are talking about more of emerging urban markets. I mean, the smaller towns which are becoming larger, some of the new towns that are developing in and around, the satellite towns that are developing in and around the larger cities. So these is really our mainstay. I mean, we are not really going rural. And so we don't expect any deterioration in credit quality. The credit cost this year, we ended with about 40 basis points. We should be in the same ballpark in the coming years.
All right. Manoj, quickly before we let you go, I just want to confirm the NIMS number from 6.1%. Where do you see that number headed? It stabilized at these levels?
6.1 and thereabouts is we should be able to manage. And it all depends upon how the interest rates move.
Okay, all right. And, final question then before we let you go. You got a large shareholder in there. We asked you about this last time as well. Every now and then there's a bit of a rumor that Warburg wants to exit their holding. Have you heard from them with regard to what they want to do with their holding, or no communication whatsoever? They want to hold on?
No, they are a recent shareholder. They came in, just 2 years ago. So we expect them to hold on for some time to come.
Manoj, just one last point. Now home loans are a pretty safe product in the overall spectrum of sort of products in the financial space. But obviously, I mean, we've seen accidents in this space as well in other institutions. What's the risk? I mean, the growth potential is there. As interest rates come off, I mean, you will benefit. So growth perhaps should not be a problem. Briefly, if you can tell us, I mean, is there any risks at all on the asset quality side, or that is completely...
No, it's a secure product.
Safeguarded.
Yeah, it's a secure product, and I think it's all about, having a very calibrated growth. So hiring the right people, giving enough time for training them and for them to settle down, and for the organization to kind of build up its foundation. So we are expanding at a pace that we are comfortable with, which is why we said, I mean, we could probably grow at much faster than what we are growing, but we said that we'll keep the growth at about 30% per annum. So it's all about calibrated growth and planning and executing.
Okay, got that. Manoj, appreciate your thoughts. Thanks a lot for joining in and speaking to CNBC-TV18. That's Home First Finance looking at a 30 to 35% growth in their AUMs over the next couple of years. So that's a sustainable growth rate. And they're looking at the large affordable housing market, which is growing at a pretty strong pace. Devin Choksi is still with us. Devin, any thoughts on this one? It hasn't really done much. In the last 1 year, if you look at it, it was about 760 a year ago and 715 today. So any thoughts on whether investors should go for this one or not?
So generally, I think with this kind of companies growing at 30% plus rate of growth and maintaining the steady rate of margins without incurring any kind of a non-performing asset kind of a situation, they should be in the preference list of most investors, I would think that way. And probably, I think they would wait for the market moment to pick up. I think probably in last few quarters, the market momentum was not so conducive for many of the small and mid-cap stocks. I think the situation is now turning for better. I guess the liability side situation, the pressure on margins, etc., is also not seen as much. At the same time, I think growth continues in the business, particularly for the housing finance. And as the company talked about affordable housing finance as their main focus area, I would like to believe that I think in coming year and two, we would be seeing a significantly large amount of play from this particular stock. So maybe I think the right time for those investors who are basically wanting to buy into small cap stocks for next 2 years kind of arrival.
All right, Devin, we'll take a quick commercial break. Home First, by the way, his valuations have also moderated a little bit, even as compared to, say, 4-5 months back. Used to be 5 times price to book. I think it's now around 4, maybe a little under 4 times price to book or so. 713 is where the stock now trades at. We'll take a very quick break here. Devin, of course, is still with us. More stocks to get on to. And a little later, we'll also have Mitesh and Sudarshan joining in with some quick technical trading ideas. Stay tuned. Okay, welcome back. SGX is on your screen. We're down about 85 points according to the SGX Nifty futures. Anuj is here in the studios to run us through what he's making of things. Anuj, good morning.
Morning, Prashant. Big day for markets. I know we say that daily, that's our job, but today actually is a big day because we have the biggest decision from the Fed in terms of the rate hike decision. And, if the Fed hikes to 5.25%, Prashant, this will match the highest rate of this century. And the last time rates were higher than this, Nigel and Sonia were not even born. Both of us were. Of course, it's early 80s that I'm talking about. But the Indian market will preempt the Fed move in the last 30 minutes of trades. That's what normally Indian markets do. So let's see how things move. In terms of taking home any trade today, it will amount to gambling. So I think if you're a near-term trader, perhaps 320 is when you settle all trades. Bank Nifty showed some signs of tiredness yesterday. And it's IT which has led the rally over the last 3 days. And that's where it will get tested for two reasons. A, it will test the 200-day moving average, the Nifty IT. And B, the Fed's decision will have an impact. And what's happening in the US, especially the banking crisis, will have an impact on the Nifty IT. On the Nifty, I think last Friday's rally had disturbed the logical stop loss of the trades because it was so big. It's at 17,885. And I think for traders, it's too deep positional stop loss. I think the Bank Nifty, there are two important support zones. Yesterday, of course, the Financial Nifty expiry impacted the sentiment. But overall, first support zone is 43,100 to 43,250. I think the bigger support zone for the Bank Nifty is 42,800 to 43,000. No signs of shorting yet, but let's see if the market's holding these crucial levels. And of course, tomorrow morning, we take a fresh call on the market.
All right. Anuj, thanks very much for that. So important day, and we'll come back tomorrow morning with a lot of new information and a lot of kind of better sense of which way the market perhaps wants to go. Will we see indecision at highs, I think, is the question. Overnight, both the S&P 500, I was making this point earlier, both the S&P 500 and the WIX have basically completed what we call triple momentum divergence. The S&P at highs and the WIX, the CBOE WIX at lows. So price action is sort of coming into a very interesting kind of pattern.
Also, another interesting thing is that, perhaps the market is also waiting for this event to move out of the way, right? Because it's been a buy on dips market the last 15, 20 days. So momentum is back, confidence is back in the market. So you never know if the bulls are just waiting for this event to move out and then resume the uptrend.
It's entirely possible, Sonia. It's entirely. And we've seen that, before as well, that maybe a little bit of pause and then market moves on. So let's see. Mitesh and Sudarshan both are with us with their own sense of how things are setting up. Gentlemen, good morning. Good to have both of you here. Sudarshan, first up to you. How are things looking? I mean, the market yesterday sort of held on to the early gains and then kind of gave back some towards close. And then we are coming into today with overnight Qs not all that great and a Fed decision later tonight. Your sense?
Yeah, good morning. See, we have been long since 17,600. When there was a consolidation, I was saying buy on dips, and that trade has worked well. Yesterday, my suggestion was get out now. We had a big gap up, and the chances were that that gap up would lead to a process of consolidation. That process started yesterday. The market did nothing during the day. All the gains that we had were because of the gap, not because of any movement in the market during the day. I think this consolidation will continue. It can take the shape of small declines. It's not just that it will be straight line. There will be some minor decline. So the Nifty is a complete avoid for today. The Bank Nifty is suggesting weakness, as Anuj also said. It's very difficult to say go short, but traders could look at an intraday shorting opportunity for the Bank Nifty. But for the Nifty, do nothing. I assume you've taken your profits. Step aside.
Okay, take your profits and step aside. That's perhaps a prudent thing to do. Mitesh Thakkar is also joining in. Mitesh, do you have a different view? Because, this market momentum has been pretty good. So if you get a dip, is there a good chance that, the street buys into it?
Good morning, Sonia. I'm not sure to do that today. Broadly, we have been very close to 18,250 levels, which is what I was looking at as a target area. And today we get a gap down, which could break the intraday momentum. Having seen that, there could be a slightly bigger pullback playing out. So I think the idea would be to wait for tomorrow morning, as Anuj was also highlighting, and closer to 18,079.50. That's a very strong support area on the Nifty, which I'm looking at. I think is where I would want to see if the market kind of stabilizes and gives some kind of reversal signal on the upside, then buy into it. So for the time being, I think I would go with the idea of taking profits off the table. In fact, on the stock side as well, we'll explore some shorting opportunities given the fact that we have been trading with only long ideas over the last many weeks. So I think now is the time to possibly balance that stock trading portfolio as well. And on the index, wait out for the dip to be slightly on the deeper cut, and then I think explore buying closer to about 18,000 levels.
Okay, what about individual stocks then? What are we looking at this morning? Sudarshan, let me start with you.
Yeah, just a word, Sonia. See, there's a big news event we all understand. It's like an alligator in the water. Now, why would we want to enter that water today, that river today? That's why it's best to avoid it. MCX is a shorting opportunity. That's my only intraday short. Everything else is a buy because even in a consolidation, there will be buying opportunities. So MCX is an intraday short with a stop above 14.13. SAIL is a buy. SAIL had a very good day yesterday. It's broken out of a trading range. So buy with a stop under 81. Chambal Fertilizers was earlier in my list. I suggested a large head and shoulder, bullish head and shoulder is under construction. That's on the verge of breaking out on the upside. That's a buy with a stop under 278. And India Cement is a buy on dips. We'll just find out whether it works or not. Follow your stops, but still it's a buy with a stop under 180.
Okay, all right. And Mitesh, what about you?
I have 2 buys and 2 sells. MCX features on my list as well. Similar stop at 14.12, targets of 13.55 here. Glenmark, after a very strong rally, is now showing signs of a pullback. So from a trading point of view, that's a sell with a stop at 550 half for targets of 530. On the buying side is Hindustan Copper. Keep a stop at 102, look for targets of 110. And Jubilant Foods, is trying to give some kind of reversal on the upside. That's a buy. Keep a stop below 453, look for a target of around 480 to about 485.
Okay, thanks a lot, gentlemen, for joining in and helping us with some trades for the day. Let's step into a quick break. On the other side, we have the pre-opening rates. We will also have Amit Dixit, the analyst at ICICI Securities, to discuss the earnings that came through for Tata Steel. Stay with us.